Hello, everyone.
Hello,
Can you hear me?
we can hear you.
Okay. Welcome back. And hopefully, you were able to do the problems and so on. I will again, as I always begin my class, first, if you've got anything to share, any good news, anything you would like to share, please share. After that, I will take any questions you have on chapter 18 or 19, cost behavior and variable costing. And if after that we get into the master budget, and I just now sent you a handout on the email, which we'll be going over if we reach there. So your turn now. It's okay. Uh, there are 19 of you logged in and are silent. So I will, as that my assumption is that you don't have any questions on any of these chapters. I'll begin on master budget. And have you got my email from today?
Yes.
Okay. So what I'm going to do is I'm going to be a little bit slow on this chapter, and it will take at least 2 to 3 class periods for me to at least 2 class periods to finish this chapter. And I do want you to take out your whatever calculator or Excel sheet and be ready to do the computations. And if you can keep your cameras on, that would be very helpful. Otherwise, it seems I'm the only one in the classroom. I know you're shy, but uh, it's just useful for me to know that I need to get some response. So, what I'm going to do is, as I said, I will start the chapter. I'm going to tell you a story first. It's not really a story, it is an actually, what I used to do in my previous life. I was financial controller for a hotel called Holiday Inn Crown Plaza. It was Holiday Inn Crown Plaza at that time. And I used to work over there. Maybe I can even show you the pictures of where I used to work. Uh, Let me see if I can find that. Well, I found some pictures. I'm going to share the screen. So this was, can you see the screen?
Yep.
Okay, this was, it was when I used to work over there, it was called Holiday Inn Crown Plaza. It is now called the Lalit. That was the name, that is after the name of my boss, who was a CEO at that time, and he passed away due to a heart attack in London. So this is where I used to work. Uh, I'm trying to find good pictures. Oh, here it is, the website. Well, Okay. I don't want to book anything right now. Anyway, this is the best I can do at this time. So you've got these are various rooms or various kinds of rooms which were there. This was the front lobby. Uh, in this lobby, basically, this was with me. All the front lobby control was with me. This was the hotel over here. Instead of Lalit, it was written Holiday Inn Crown Plaza. This is in the daytime, I guess. So this is where I used to work. I wanted to show you something else also. Uh, these were the facilities. And then we had different specialty restaurants like Baluchi for the Mughlai food, multi cuisine. This was my favorite place. They they probably used to bake the best cakes and I have ever eaten. And since chef was a good friend, he made kind of custom cake for me, like on a for my son's birthday. They made a train cake in the shape of a train with like two engines and every two bogies and so on. Then this was the coffee shop or a restaurant and so on. So there were multiple options over there. Bar if I needed to go there and so on. You get the idea, right? Okay. So so I was the financial controller at Holiday Inn. As I said, I had 200 people reporting to me and handled about 8 departments over there, including accounting, finance, purchasing, food and beverage control, front office, security, and housekeeping. So those were some of the departments which were with me. And out of all the things which I did, one of the things that I did was make a budget. Excuse me for a second, please. Sorry about that. Uh, so, so as I said, one of the things that I used to do was make a budget. And so let's start with the process in that case. You should be able to see my screen which says Holiday Inn. Are you able to see
Yes, we
that?
do.
So that hotel is a very it's quite a big property, and let's assume I'm going to simplify everything today. And let's assume there were 500 room property and the room rate was say $100 per room night, although it was not, but say it was close to $200 or $300 now. So room rate is $100 per room night. And although there were different kind of suites which I showed you, let's assume there was only one kind of hotel, there was one kind of room, and we basically charge flat $100 per room night. Now, sometimes in the month of June, what I would do is I will call upon my sales director. And when I called upon my sales director, basically I invited him to one of those restaurants, specialty restaurants that I showed you. And we'll call them for lunch, call him for lunch. And midway somewhere during the lunch, what I would do is I will ask him one small question. That is, what is going to be the occupancy percentage for the next year? So now what can you see on the screen?
Holiday Inn, the slide.
And does it show you does it show you 2 lines or 5 lines?
It shows us 2 lines.
Okay. What's happening here? Does it show you anything?
No, we only see you now.
Does it show you anything now?
Yes, we see. We're back on the slides, and we have 4 lines now.
Okay. So now you see lunch.
Yes.
Okay. So the question I would ask him is, what is the occupancy percentage for the next year? When I ask that question, do you understand what occupancy percentage means?
How
Would it-
filled your hotel is?
How full your hotel is, right? So if you've got 500 room property and occupancy percentage is say 90%, then 450 rooms are occupied, right?
Yes.
Every day. Okay. So So let's assume that he went back to his salespeople because they would know more closely into which area and what clients they can sell the rooms. So he comes back and gives me an occupancy percentage for 3 months, 80%, 70%, and 90%. They are 500 room property, $100 per room night. Can you give me the sales revenue for 3 months, please? January, February, and March, separately and together, total. Is the question clear to everyone?
Yep.
Okay, your turn. You can type in the answers or you can say your answers, or I can open the chat room, chat box. You can type in your answers and I can see it.
Would January be 40,000?
I'll tell you in a minute. You just type what you got.
Okay.
I'll answer that question in a minute. I'm waiting for right answer to come. Just to let you know, I've still not got the right answer, so I'm still waiting. Sean, is it 35,000 or 225,000?
I got 225,000 for March. I messed up February. The other one I wanted it to be February, but I got confused with the spacing. So I 35,000 I wanted for February.
Okay, 35 for February, 225 for March.
Yes.
Okay, what about January?
40,000.
Okay. Anyone else? Think, everyone. Look at the question again, please. What does it say? Kate Ederman, 1,240,000. I guess that's what I was looking for. Good work, Kate. Okay,
Thank you.
pardon me.
I just said thank you.
Welcome. So, Kate, what did you do differently?
So I calculated 80% of 500 rooms, and then I multiplied it by the $100 per night, and then I multiplied it by the number of days in the month.
Why did you multiply it by days in a month?
Because that gives you the total revenue for the whole month.
So what have your other friends done?
They just left off that last step.
So your friends have given me revenue for how many days?
Just one day
1 day instead of?
instead of the whole month.
Okay, thank you very much. If you were in the live class, I would have given you an extra credit point, Kate. Okay, does everyone understand what Kate said just now?
Yes.
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 Thank you, Kate, for explaining it. Does everyone understand it? How Kate got 1,240,000 for January?
Yes.
Just think about it. I might have saved your job. If you were in my accounting department and gave me that number, I would have fired you. Do you see the difference? Okay, any questions on this, please?
No.
So next is that out of these sales that took place, say 80% of them were credit sale and 20% were cash sales. So 20% were just people who would come and pay with the credit card or cash and so on, right on the front desk. I showed you the front desk that's where you will check in and charge. Credit sales are generally those corporate sales to the airlines, to bigger companies, where where we will send them the bill and hope to get the payment in a month or 2 months. So out of these credit sales, the collection was as follows. 70% of the credit sales are collected in the month of sale and remaining 30% in the month following the sale. Does everyone understand this sentence?
Yes.
Then the question to you is, what is the total amount of cash collected in the month of February? So if the question is clear, please compute the answer and write it in your chat box.
Is that 30% being collected as cash or credit?
Credit sales. Cash is already collected, means cash will be collected immediately. So there's nothing on cash collection.
Okay.
Okay, any other numbers, please? $196,000, most of you have written over here. It is already collected, that is already collected. But you'll also collect part of the credit sales. 70% of the credit sales are collected in the month of sale. So if 80% is 784,000, 70% of that will be collected in the month of February. And remaining 30% in the month following the sale. So 30% will come from your January sale, right?
So like when you receive credit, is it considered cash then?
What do you mean by when you receive credit? You're offering credit in this case. You're supposed to collect the money. When you make credit sales, what's the journal entry? If you make credit sales, your journal entry is accounts receivable to sales revenue, right? When you make cash and cash sales, your entry is cash to sales. This you have already collected, that was 196,000. Now account receivable to sales, you had for February 784,000 of account receivable, right? So you're going to collect money against that account receivable.
I have a question.
Mm-hmm.
So was the question like, were we supposed to find out how much credit we were getting or how much cash? So I think that's
The
where I got
question
confused
is,
on.
what is the total amount of cash collected in the month of February?
So would that just be 196,000?
No,
Because cash and credit, or are we doing
because
the,
you'll collect part of the 70% of credit sales in cash also, right?
yeah,
So it will not only 196,000 is in cash, but you're also going to collect against these receivables. You're going to collect 70% of it. You're going to collect 70% in cash, right? Do you understand that?
Yeah,
can you say that again?
I think the confusing part was we didn't know that credit sales counted towards how much cash. We thought it might have been like a separate section.
No, it says the total amount of cash collected means there's nothing to collect on 196. It's already collected, right?
Right.
What do you understand by this? 70% of the credit sales are collected in the month of sale.
So would it be how much cash from credit was collected?
Yes, collection is of the cash against your credit sales.
Okay, I think that's where I got confused because it just said cash. So I don't know if you meant cash from credit or just cash, period.
No, collection automatically implies that you are collecting the money. Means what are your the collection against the account receivable implies that you are collecting cash. You understand what account receivable are?
Yes.
Yes. So that is basically entitled to receive the money against the credit you have issued or credit sales you have made. So So in this case, we made the total sale of 980,000 in the month of February, out of which we collected 196,000. So people are not going to pay this again because you already collected that. Now, out of the 784,000, we are saying we are collecting 70% of it in the month of sale. So let's look at, say, January sale. So 70% of 992 will be collected in January, and 30% of it will be collected in February, right?
Yeah, so were we supposed to take 70% of February and then 30% of March?
Of January, not March. So 70% of credit sales are collected in the month of sale. So if in January, can you see the Excel spreadsheet?
Yeah.
So if your credit sales in January are 992, right? If I say 70% of this will be collected in the month of sale, then what does it mean? That 70% of this 992 will be collected in the month of January, right? Similarly, 30% of this will be collected in the month of February. Does everyone understand that part?
Yes.
Then for the month of February, your credit sales were 784,000. So if your sales were 784,000, then 70% of that will be collected in the month of February, and 30% of that will be collected in the month of March. And then you got your cash sales, which was 248 and 196. So your total collection for the month of February, you added up with all three, you get 1,042,400. Does everyone understand that part, please?
Yes.
Questions, please.
So we take 30% from the previous month and add that to the 70% of the current month.
That's what the question says. It's not that it's collecting from the previous. Yeah, it is will be because from the question says that information says that 70% of the credit sales are collected in the month of sale. That's not a problem. And then remaining 30% in the month following the sale. So that's why we had first 70% of it collected in the month of sale and then 30% in the month following the sale. Same here, 70% and then 30% of the remaining. Show me how much, or work out the number for March, please. Just change this February to March. Give me the number for March. So everyone understands it will be 1,295,400. Now for January, sometimes they might say in the problem that you have got certain account receivable which are pending from the previous year or previous from December, say, which are pending, then you might collect those in the, if the question would have given you account receivable at the end of December were say 190,000. In that case, that 190,000 will be collected from that accounts receivable. Or whatever the problem says, means it might be the entire 190,000, or it might say 150,000 from these receivables were collected and some were bad debts, something like that. Okay. Okay. Does everyone understand that part, please?
Yes.
So generally the question, whenever you get the answer, it would look like this. Your answer would be 70% from the current month and 30% from the previous month. If it was spread over 3 months, then 70% from the current month, 20% from the previous month, 10% from the month previous to that. Okay. Any questions, please?
Nope.
So generally the collection sales revenue is the starting point for the budget. That's where you decide. So once I got the estimate from the sales director, then I will call the food and beverage director to give me the estimates based upon the occupancy. So food and beverage director obviously will give me the sales revenue that would take place. Approximately 70% of the sales revenue came from the hotel room sale, 25% came from the food and beverages, and actually, and then the remaining 5% came from other services like other guest services like laundry and rental of some of the shops, etc. Once I got the estimate from the food and beverage director, I will call the chief chef of the hotel and ask them that this is the sales that we are expecting in terms of food and beverages. Can you tell me the raw material that would be needed for those sales? So food and beverage chief chef would give me an estimate of how much raw material in terms of vegetables, meat, wine, etc. we need to buy. So that gave me some estimate for purchasing. So then I would ask my purchase manager to put the order, or actually we floated the tender for 1 year. So we would, once we decide how much we want, we would ask someone to give a quote for the entire year. And I'll also call the housekeeping people to give me an estimate of the expenses that will be incurred to, say, clean the room, change the chocolates, etc. for the housekeeping. And then I'll add up any other expenses estimates. In case we wanted to renovate any of the restaurants or say change carpets for 3 floors in the hotel, that all those will fall under the capital expenditure plans. So we'll also have our capital expenditure plan. I will make the cash budget in the financial statements which you prepared in accounting 201. We prepared the cash budget or cash flow statement using indirect method at the beginning of the class. When you put it all together, that is what we call as a master budget. So this process will take me about 2-3 months and get the budget ready and then circulate it. We'll go for an approval by the CEO of the company. So that's the process. So based upon the sales, we will decide how much production needs to be, how much we need to produce. Based upon the production, we will do our purchases budget. We'll decide how much direct materials will be needed, how much will be our purchase budget based upon the material that we need to purchase for the production that is anticipated. Then we add the direct labor budget or any other cost budget to it. Remember the difference between the production and the purchase budget. Production is for the finished goods. Purchases is for the raw material. So for any production budget, the concept wise, it is very straightforward. Imagine you've got opening balance of cash. You begin the day with in cash with say $1,000. You earned or you got a salary of say $5,000. So the total available to you now is $6,000, right? Suppose you spent $4,000. That means your ending balance of cash is $2,000. right? So if you spend changes to say 3,500, that means your ending balance will change to 2,500, right? So
Yes.
so any of these is like a equation. So if you don't know what was your opening balance of cash, suppose it was X, you can find out what X was. Suppose you didn't know what, oh, come on, Sunil. Suppose you didn't know the opening balance of cash. Can you find out the opening balance of cash? Right? So 6,000 minus 5,000 will give you the opening balance. Total available minus earned, right? Similarly, any of these numbers could be missing. Maybe you don't know the ending balance. If you don't know the ending balance, can you find out the ending balance? Right? So similarly over here, it's just the same principle here. You have got the number of unit of you're expected to sell, plus the desired units in ending inventory. So whenever you make a budget for the number of units to be produced, then it is based upon your sales. Plus, if you want to keep some inventory, some safety stock, then you add that to it. That will give you the total available. This will give you the total available for the units. So minus your estimated total units, the beginning inventory will give you the total units to be produced. So again, whatever the total available is in between, you'd subtract the beginning inventory, gives you the total units to be produced. Because you don't want to produce what you have in the beginning inventory. Is everyone with me, please?
Yes.
Any questions or clarifications? Okay, go to the handout, do problem number 1 on provoke operation. Can you see this handout with you?
Yes, we can.
Okay. Do you see handout on my screen or do you see the PowerPoint at this time?
The handout.
Okay, so you need to do that problem number 1, please. And you can type in your answers. Questions? Okay, I'm assuming there are no questions here. So next is based upon your production budget, we make the purchases budget. So first is, in this case, it is materials needed for production. If you notice that the format is very simple and very similar to what you did for the production budget. So based upon the production that we need to have, we decide how much material we need to buy, obviously, right? If I need to produce 100 units, then and every unit takes 5 units of raw material, then I need 500 units, right? Plus, since we had the ending inventory, so we need something for that as well. So we might need to have some ending inventory as well for the raw material. Please note, when you make the materials budget, it is based upon the raw materials, not the finished goods like you did in production budget. Subtract the beginning inventory because you don't want to buy that you already have. Gives you the direct materials to be purchased. Now, always remember, inventory is an asset, and assets are always recorded at cost. Assets are generally recorded at cost. There are kind of what you call 1 or 2 exceptions to it. So what I want you to do is look at problem number 2 and do it. It says Northwest Manufacturing. Type in your answers. Okay, did most of you get it? Okay, I'm not, so you have typed in your answers, right? Okay, so for the Northwest manufacturers, materials needed for production, we know that for 1100, for the month of August, 1100 units are going to be produced at 0.5 ounce per unit, so 550 units are needed. Now, as far as the ending inventory is concerned, ending inventory for August is based upon, what does it tell you about the ending inventory? It tells you that company maintains an ending inventory of platinum equal to 10% of the following month's production usage, right?
Yes.
So what does it mean for ending inventory for for August will be based upon September's production, right? So 980 is September's production, so 10% of that will be 49, right? Now, similarly, beginning inventory of August is, so less beginning inventory of August is based upon the ending inventory for July, which is based upon the next month or the August production. So August production was 1100, 0.5, 10% of that gives you 55 ounces. So total direct materials to be purchased is 544. And that's your answer, which most of you got. Most of you had A, so well done. Questions? Is everyone good on this, please?
Yes.
Good, very good. Yeah, I'm giving you enough time to ask questions so that we don't miss anything. Now, the next is, just try to do this again. Assume that the October production is 1200 units. How many units need to be purchased for September? So I just created another question, assume this. Okay. Let's type in a number. Getting the answer is 180360. That's right. Very well done, everyone. In budgeting, this was probably the toughest problem you will have. And if you have done it right, you should be comfortable. Or one of the tougher problems, just because it involves that beginning inventory. So, any questions, please? So we did all this. We did the production budget, did the purchase budget. Based upon that, we'll have the cost of goods sold budget, add the selling and administrative expenses, and make the income statement. The next problem is number 3 on the Granger company. Do number 3, please. Type in your answers. Okay, it tells you these are your account receivable, which is 58,000 as of January 1. 35,000 will be collected in January and remaining will be collected in February. So 58 minus 35 will be collected in February as well. Okay, it says E. I guess. So in this case, obviously it says 50% is collected in the month of sales. So from January, 50% of January will be collected in January, 30% of January will be collected in February, and 19% will be collected in March, and so on. So February, 50%, 30%, and 19%, and so on. Does everyone understand that logic? Like it's the same thing which we did earlier. Any questions here, please?
Yeah, I have a question. I don't know how you would figure out like February's total without having like December's information or February's.
Now we have to find the cash receipts in February, right?
Right.
So we have the information for January, February, March, April, right?
Oh, okay. I didn't see that before.
The sales are here, right? That's how it gives you the sales are collected in the month. Or do you not have the handout?
We have it.
I
It's
have
it's
it,
just
but
it's all scrunched up on ours. Like
yeah.
my chart is in the middle of my number 2 question, so I didn't even know that there was a chart for the question. Like it doesn't look like it on yours, but the one that you sent to us, whenever I open it, it's formatted all weird.
Hmm. Well, I can resend you. That's the
It
only
makes
thing.
it makes sense now that I can see the chart with all the numbers in it. I didn't. The only chart that I was seeing above mine was the cash, accounts receivable, and accounts payable. So that was all I was going off of. I didn't see the January, February, March, and April table.
Okay, let me try to send it to you again if I can. It probably changed the format on me.
Yeah, I don't think it was anything you did. I think it was just like the formatting got all changed up whenever it sent.
I'll send you the other version of the file, which hopefully might help. I sent you another file, see if that helps any. Let me know if you received it.
I received it.
Is everyone good now?
My formatting's still not good.
Mm. Even with the new file?
Yeah, mine's still the same too.
If I open it up over here.
I don't know why it looks weird. Maybe because I'm opening it up on a mobile phone. Maybe that's why it's weird.
Oh, on a mobile phone, yes. Why, are you not downloading the file?
No, I'm just opening it straight from my email on my
No,
phone.
download the file and then open it.
Okay.
Okay, I'll try that.
Yeah, once you download the file and open it, it should be the same file, means it cannot be any different.
Yeah, I opened it up on my Word app and it looks better now.
Yeah. Always, whenever you get an attachment, download the file and then open it. Is everyone good with it, please?
Yes.
Yep.
Okay, good.
Yes.
Okay, at least that problem is solved. So finish problem number 3 on your own, and I'm running out of time now. So I will see you on Tuesday
Sounds good. Thank
on,
you.
on 23rd now.
Thank you. Have a nice weekend.
You too, bye.
Thank you.
Have a nice weekend.
You too, take care, everyone.
Thank you.
Do you want me to wait for any questions?